back to the big story, which is dissecting, of course, Reliance Industries' earnings. The numbers beat estimates on robust growth in the digital services business as well as the upstream business, which offsets a weak contribution coming in from the oil to chemicals business. Jio delivered a very strong performance as the average revenue per user jumped up by over 7%. Retail saw a bit of softness in demand in the fashion and beauty vertical. So, fairly mixed bag, but how's the sum of the parts looking? That's the question. Well, we have with us Prabal Sen, energy analyst at ICICI Securities, also Naveen Kulkarni, CIO at Axis Securities. Gentlemen, morning. Thanks for joining in. Let's start with the energy business, Prabal, and take us through, because it's mixed, right? I think oil and gas has been ahead of estimates, but oil to chemicals, if you look at the EBITDA performance there, then year on year there's a drop. So, I mean, how do you kind of sum it up, and what is the forecast for the coming, say, 2-3 quarters?
No, I think OTC continues to be weak. This is the second quarter where we've seen a little bit of weakness. Not much that Reliance can really do about the fact that the global macro itself is particularly weak. And I think that's something that's likely to continue. I was hearing the discussions around the fact that the crude is also starting to come off. The only reason that crude prices had been propped up in the last couple of weeks was the anticipation that, or the fear rather, that the Israeli-Iran conflict could develop into something much larger and engulf key transit points like the Straits of Hormuz. That doesn't seem to be happening based on the news coming out. So in any case, the crude price increase was also not really indicative of any great strength in demand. The fact that Chinese demand is not expected to really come up in a big way, based on at least the stimulus measures that they've announced as of now, is probably an additional factor that should keep refining margins and petrochemical margins on a slightly muted level from what we can understand. So from an OTC standpoint, I think the weakness will probably take a little bit, a couple of more quarters to sort of normalize, and even then, frankly, looking beyond that is very difficult given how uncertain every aspect is in terms of demand as well as geopolitics. Upstream, yes, I think the production numbers were probably a little bit ahead of estimates. There was a little bit of pricing delta, but please remember that now, once the plateau production has been hit, till the time that the next round of field development actually comes, it is likely to probably be flattish, barring the pricing delta that will come from October. From a production standpoint, I think they're close to their peak production of close to 30 MMSCMD. And now the government share of profit petroleum should also start to rise marginally because the investment multiple would have hit its milestones as per the production sharing contract. So the energy business, I think, does look a little bit under stress at this point of time. As and when it normalizes, I think it's something that we'll have to keep an eye on.
Okay, so yeah, O2C weakness expected to continue. Energy is perhaps going to stay okay. Prabal, just to talk about the new energy business, we've spoken about this in the past as well, right? Massive plans. As of now, by when are you likely to factor in some sort of an earnings sort of impact coming through? What are the timelines that you're working with now by when it starts having a P&L effect?
Very clearly articulated the kind of timelines for the first wave of the factories, in terms of the production as and when it commences. But I would imagine that over the next 6 to 9 months, as and when the milestones are hit, specifically on the solar PV module production, which I think the guidance would start from the end of this year. So by FY26 we should have some numbers coming through which would enable us to start building those in earnings. But to be on the safe side, I think a material level of contribution to earnings perhaps can be seen from FY27 onwards would be my best case as of now. As of now, we continue to play safe and build in a multiple on capital employed in our SOTP. But I would say that FY26, H2, FY27 is when you could probably start to see those numbers coming through in the P&L as well.
All right, Prabal, just one more question on the new energy business. How much can it add to the total profitability, say, if you're penciling in a number by FY27, FY28 as a percentage of the total consolidated PAT? Do you have a number out there that the kind of contribution we can get?
We have not published earnings estimates building in new energy, so it would be difficult for me to share a guess estimate. My apologies.
No worries. No worries. All right, Prabal, got that. Naveen, let's come across to you before we take that snappy break. I was looking at a Jefferies note, and they say in the last 5 years, when Reliance trades at these sort of multiples on an EV upon a beta basis. The last 5 years, every time it's traded around here, it's bounced off here and it's been beneficial to investors. Your take post this 14% correction that we've seen on the stock?
Yeah, so if I were to look at the quarterly numbers, the O2C business was quite weak because of the global factors, as Global has already alluded to. The retail business was also slightly weaker. So I think things can improve from current levels, right? So at least the retail business definitely can improve from current levels. Margins, they already got it up. The telecom business is doing quite well, right? So 2 out of 3 businesses which almost contribute to close to around 70% of the company's value. These businesses should do better from here. From that perspective, I believe that from current levels also valuation-wise it's quite cheap. So fair value for Reliance, consensus expectations are in the range of around 32 to 3,300, which gives a good enough upside from current levels for a lot of people to look at, right? So considering a large cap stock with a good amount of liquidity. So it looks pretty decent at levels.
Okay. Naveen, actually, I want to understand which of the businesses will take it, perhaps drive it to that 3,300 level that you spoke about. But we do have to take a mandatory commercial break. Gentlemen, stay on. We'll come back with more questions in just a bit. Welcome back. So getting back into that conversation on Reliance Industries before the break, Naveen was telling us the stock can perhaps climb back to levels of around 3,300. So Naveen, tell us, I mean, what will perhaps drive it to those levels? Because Prabal was just indicating that O2C is unlikely to pick up meaningfully. Will it be Jio's continued performance? Because clearly the tariff hikes have been well digested by the market, right?
Yeah, so if I were to look at the tariff hikes, that I think is already getting factored into the numbers. So ARPU has jumped up by almost 195 rupees. But also important factor from Jio's perspective is that this is a very, very consistent business. And we will see consistent uptick in ARPU as they have rolled out the 5G network, right? And also people will keep upgrading to higher data packs. So that theme will continue to play out, and Jio should be able to cross an ARPU of 200 rupees in the next couple of quarters. So from that perspective, there is a consistent uptick happening in the telecom business. So EBITDA numbers for the telecom business are pretty much tracking in line with the consensus expectation. We should close this year at around 65,000 crore plus kind of an EBITDA number for the telecom business. As far as the retail business, that has been a little soft. In general, the market for retail also has been soft, except for, let's say, a few areas like jewelry aside. So that there is a lot of scope for improvement. Even in this quarter also, if I were to look at number of store additions, that were also not very, very great, right? Just 28 net stores got added. So scope for improvement in that business is quite significant. We see that the government programs are also focusing on capacity distribution. So all these factors should help consumption boost. So next 2 to 3 quarters should be better. Of course, festival season is all upon us. So this quarter should be better and quarter 4 should also be better. So overall, from that perspective, I believe the retail business has a significant chance to pick up. So both these business put together contribute to almost 70% of Reliance Industries valuation. If they are able to do well, I think the stock will jump up. Apart from that, this was pretty much a very, very tough quarter in terms of overall results. So I think things can look slightly better from the current levels.
Okay, all right, Naveen, thank you very much for stopping by and weighing in on Reliance, making sense of the second quarter performance for us. On that note, we'll take another very quick break. We'll come back. We'll have the pre-open rates with us, and of course, we'll get you some technical trading ideas as well.